the USDCAD or the Loonie. So there's what's going on the USDCAD after we did previous analysis was that the market went up during the pandemic, then it went sideways, put Gator to sleep, and it was then tight here. And after it broke below these levels, it created what we call the waltz pattern. So you have a trend candle that closes outside the range, and it's followed by mostly sometimes an inside candle or these small little pause candles. So push, pause. This is usually followed by a pause again. On the H4 or the lower time frame, you'll get a setup one on this. After that, we had this pin bar type of, but not really pin bar because the range of it is not really high. It should be like tail should have come all the way here. But it did react after that. It went up. I thought it probably come to these levels, but it's been rejected by the red line, if you can see, and it came down. Now what we see is this is possibly a wave A up. So what could happen is that it might be something like so. So, and I'm going to put this B here below this box, and I'll tell you why. And then this. So this is a bit of a prediction right now. Prediction is good and bad in trading. Best thing is to trade the setup. But anyway, that's a different subject. So what you look at this, if I'm correct and this is B, what would happen is that this would be an A, this would be B, and this would be C, and the C would poke out. It would kind of come down here, and then and that's, I'm talking about the ABC inside the B wave. So it will go up. So what we need to do is to look at the 4-hour chart. So if you look at the 4-hour chart, what you see is an impulse wave up. So that, because wave A's are impulsive, this fits the character of a wave A. So this is B. If it is B, then this is A. This is B, and this could be a C, and C usually pokes below this, which we call the PC. If that happens, we could have a trade on the 4-hour chart. So we could go, let's say, short here. Stop loss will be up there. We'll see what happens, but not really at this level, but we'll see if the market goes strongly down and starts to pull back, which is the characteristic of a C wave, that it's very impulsive. Then we could move stop loss to break even at here. So when let's see where we get our 2R. So we are getting our 2R right next to the levels to the left, which is a very good thing. So we don't have to deal with these again. So it comes, hits your 2R, you're out. At 1R around here, you'll move your stop loss to break even. So that's one scenario that could happen with this based on what we see on the daily chart. Otherwise, if it stalls around here and starts to do a C up, then what we could do is to see if it goes like that, then we can take a buy order there. Stop loss will be somewhere here, and we can then target the end of C by using the fib expansion. So the rule is that often wave A is equal to wave C, so it will be 100%. So you could have your target point somewhere up there. So this would be a 1:2.4 type of trade available. So we'll see how it goes. And depending on what happens in the next few hours or candles, we will either put these ideas into action or abandon them. So that's it. And if you like this idea, give us a like button. No, give us a like.